Welcome back to our live cryptocurrency trading series. Today we are looking at the market and how it's recovering from the recent bloodbath in cryptocurrency markets overall. Today is actually the first day in over a month that we've seen for the third consecutive day. That's 72 hours. Doesn't seem like a lot, but in the cryptocurrency market, that's a lot. All the major coins back in the green. So some of these are not huge moves. Obviously, Bitcoin Cash up 1%, but Ripple up 15%, Stellar up 11.3%, Cardano up almost 11%. So if you look at the market overview, you can see I've got the 24-hour, 7-day, 30-day, 90-day, and 200-day time frames on here. And if we look at it you can see the 7-day performances are starting to turn green, and some of them are significantly green. Like here's Litecoin at 23.69% over the 7 days. Bitcoin Cash 10% over the 7 days. Dash 11% over 7 days. Lisk 25%. Bitcoin Gold 48%. So the market looks like it's recovering. So let's look at where we are at right now and how we got here, how this bloodbath started. Okay, this yellow circle at the very bottom right here is the last 3 days. So that's the recovery, the bounce that we're talking about. Obviously, these coins have a long way to go to get back to where they were when this whole crypto carnage began back on January 10th. Remember how this whole thing started? On January 10th, this is an episode of misreporting. I won't call it fake news, but it's certainly hyperbole and, hype, and possibly contributed to investor psychology or panic, also known as panic. CNBC reported on January 10th, quote, "The world's biggest cryptocurrency market considers a bill to ban trading." And obviously they were talking about South Korea, and that was actually not true in so many words. The words that they used, like I said, were somewhat hyperbolic. The actual bill that they were considering had to do with anonymous trading. So it had to do with trading, not under your own name. And we're in the United States, we're used to the fact that the KYC rules. We trade under our own identity, and that's pretty much standard procedure. But apparently, that wasn't the case in Korea. So that magnified the bad news, the mainstream media, and then investor psychology took over. And you can see if you look at what happened in the immediate aftermath of that January 10th, world's biggest cryptocurrency market considers a bill to ban trading. These are all the micro payment coins. Bitcoin in blue, Bitcoin Cash in turquoise, Litecoin in yellow, and Dash in purple. So right after that January 10th headline in the CNBC article, they all tanked. They all just plummeted. Okay, and that's what you see here, that initial plummet. In the midst of that, you got some more bad news. CFTC subpoenas Bitfinex and Tether, and there it was. The original article from CNBC was Korea official reportedly readying bill to ban all cryptocurrency trading, and like I said, that was an exaggeration. They were looking at banning anonymous trading, but this was in Bloomberg and CCN reported that the CFTC issued subpoenas to Bitfinex and Tether, and it said market on high alert as CFTC subpoenas Bitfinex and Tether. So you're already in a situation where bad news and overstatement or hyperbole of that bad news is driving the markets down, and now on top of that, you're coming at me with this. Tether has been accused of running a fractional reserve to inflate Bitcoin prices and thus cover up the financial issues facing Bitfinex. Tether is what's called a stable coin, which is pegged to the value of the U.S. dollar and supposedly backed dollar for dollar, coin for coin by the U.S. dollar, so can be exchanged anytime for U.S. dollars. And the more tether that they issue, obviously, the more liquidity there is in the cryptocurrency market. So this accusation of running a fractional reserve to inflate Bitcoin prices obviously took a toll on investors who were already in a negative mood because of the article they saw about Ethereum dives as one of the world's biggest cryptocurrency markets, considers a bill to ban trading. So that's where we stood at that January 16th. Markets were still plunging, and they recovered a little bit. Then we got hit with this. January 24th, Stripe withdrawing support for Bitcoin payments. Now, Stripe is a huge payment processing network. And then we got, just a couple days later, Japanese exchange Coincheck hacked in biggest heist in history. Now, that's not just the biggest heist in cryptocurrency history, but the biggest heist in all of history, including dollars and jewelry and gold and everything. So now we got that bit of bad news on top of we got the Stripe news and the cryptocurrency exchange Coincheck being hacked on top of the news of the Korea ban and the CFTC looking into market manipulation by Tether. Now remember that the Chinese crackdown was probably the biggest negative Bitcoin story of last year. So now we're talking about this Asia Pacific region and multiple crackdowns in the region, along with regulatory issues at home, along with market manipulation, and this Stripe story, a negative story about adoption. So Bitcoin obviously under fire significantly here. Now the Stripe story, Stripe it's a big payment processor, $9 billion company, and it had been very receptive to cryptocurrency at the beginning, but it said were it not for rising transaction fees, so Bitcoin would still be very much a part of its plan. So not only is Bitcoin losing adoption over this story, but also Stripe is putting out a statement saying Bitcoin has evolved to become better suited to being an asset than a means of exchange, and also saying by the time a transaction has been confirmed, Bitcoin's US dollar value has already changed, often discernibly. This is coupled with the fact that for a regular Bitcoin transaction, a fee of tens of US dollars is common. So now they're addressing all of Bitcoin's scaling issues, which we've known about for a long time. But obviously, when you put this in it right in investors' faces, smack in their faces, along with the regulatory issues and the Asia Pacific crackdown, which is big. Korea is between 10 and 15% of Bitcoin and Ethereum trading worldwide. So now you're adding in adoption problems plus the fact that you're being reminded of Stripe is the reason that Stripe is discontinuing Bitcoin use is because transactions are expensive and they're slow, so and volatile. So what they're saying is it's not useful as a means of exchange for small transactions, and that is obviously a huge issue for Bitcoin. So now you're talking about negative news piled on top of negative news. And, looking at the big picture, I would actually say that with all this negative news, the cryptocurrency markets are doing remarkably well. Because look back at it now. January 10th, crackdown in Korea. A lot of people thinking that it's a ban to all cryptocurrency trading. Subpoenas for Bitfinex and Tether regarding market manipulation and possible inflation of Bitcoin prices by minting of Tether. Stripe withdrawing support. The hack on the Japanese exchange Coincheck. That was the biggest hack in history. And this story is from CNN. $530 million cryptocurrency heist may be biggest ever. And that was January 26th. And that they say another seismic cryptocurrency hack because Japan was the victim of the Mt. Gox hack that occurred back in 2013, and it said around 3 a.m. local time. This is in a single transaction. Someone withdrew all of the NEM coin, which amounted to more than $500 million in a single transaction. And this is the president of CoinCheck, obviously not a happy guy, um, apologizing for their lax security. And it was the exchange's lax security was likely to be at fault here, but it also pointed up to investors one of the big risks of keeping your cryptocurrency on an exchange. You're not in control of those private keys that link to the public addresses that prove you are the owner of those coins. So not only are you not holding, are you not in control of, and you're not holding those private keys, but also you're not in control of the security of those private keys. And they can be held in cold storage, hot storage. They can be protected by multi-signature protocol, and apparently none of that was done by CoinCheck. In other words, they were in hot storage, and they weren't protected by multi-signature protocol, so that with just by getting a list of private keys, a thief or hacker could walk away with all of the coins, all of the NEM coins that the exchange held, and just like that, a single transaction. So now we're talking about negative news on top of negative news, and just to put the icing on the cake, Facebook jumps in and, of course, bans cryptocurrency ads. That was January 30th. So, and talk about piling on. February 3rd, a few days later, major British card issuers ban cryptocurrency purchases. So if you look at this big picture, again going back just to January 10th, just to a month ago, Korea ban, Bitfinex and Tether being subpoenaed by the CFTC, Stripe withdrawing Bitcoin payments, Japanese exchange biggest heist in history hacked, Facebook bans cryptocurrency ads, and British credit card issuers ban cryptocurrency purchases. Now, that was there were several credit card issuers in the U.S. that echoed the fact that they may be banning cryptocurrency purchases. So all of this just mounted and mounted to the point of driving the markets lower and lower. And like I said, I actually don't think that this is such a massive drop in cryptocurrency, considering two facts. One, that cryptocurrency is inherently extremely volatile, and two, this is a lot of negative news. It's a lot of negative news at one time in one 30-day period. So you're talking about some real, some real downward pressure on the market. And when people panic, on top of that, in addition to that, you can see the effect of it. So let's just looking back at it here. Bitcoin. Just to get an idea, Bitcoin was trading about 14,400. So 14,000 here, it was 14,900. So it was trading just under 15,000 before all this happened. And at this bottom here, on the right in the yellow circle, at the bottom, 3 days ago, it was trading at 64.67, so below 6,500. So now you're talking about 14,500 down to 6,500. And what exactly is that? 6,500. So that's an $8,000 drop divided by 14,500, and that is a 55% drop. So more than 50% drop within those just few weeks with all that bad news. Now this yellow circle is the last 3 days, and like I said, the last 72 hours look like, well, I won't say a recovery yet. Let's not get too excited about it. But let's say that this is the first 3-day period, the first 72-hour period that we've had in the last month where all the major cryptocurrencies are in the green. So that is saying something. And on top of that, several of these 7-day returns are starting to look green as well, whereas this was I don't remember if you remember, but this was a bloodbath. This was all red, all completely red. The 24-hour, 7-day, and 30-day were all red just a few days ago. So we're talking about something of a recovery. So what is going on with the recovery? I think my sense is that the uh, the drop in the market is a combination of bad news magnified by the mainstream media, just because of the hype, because that's what media does, that's their job, and uh, the investor psychology, which tends to panic when bad news starts piling up on top of a market that is looking uh, iffy. And for a while, the market was looking kind of unstable after Bitcoin hit its big time high in December of over $19,000. So now, what's happening right now, news-wise, to fuel this recovery or this, nascent recovery? Let's call it. Let's call it a tentative recovery. Uh, First of all, there's a couple of issues. I think, the investor psychology here fascinates me because it seems to me that when bad news hits and people panic and the market tanks in response, even if that bad news turns out not to be true, uh, the market just doesn't recover to where it was before. It seems to take some good news on top of that, uh, on top of the reneging of the bad news, in order to get back to where it was. So it doesn't seem to be enough just to retract the negative news, but actually add on some more positive news in order to get back to where we were. So the fact that Korea, the first thing we'll talk about is Korea, because that's where this whole thing started. And this is a story from about a week ago. New cryptocurrency rules just came into effect in South Korea, and this is from CNBC. Uh, South Korean regulatory plans to tackle cryptocurrency speculation spooked investors. Not only did the South Korea spook investors, but CNBC spooked investors. But as new rules take effect, participants are sounding a positive note. A representative, which began with the new real name cryptocurrency identification service, which basically means KYC, know your customer. People have to trade under their own identity. Said operations had gone smoothly and nothing has changed in terms of coin transaction. And participants said that the steps taken by South Korea were positive on a long-term basis. So it turns out that the new rules are not that restrictive. They're not banning trading or anything like that. They're just requiring customers to identify themselves. Now, looking at the Asia-Pacific region, again, remember that the China crackdown, China banned ICOs last year, and they cracked down on a number of exchanges to the point where a lot of exchanges had to move to places like Hong Kong and Singapore. So the Asia-Pacific region has become an issue also because it's a major source of cryptocurrency trading. Like I said, Korea is responsible for between 10 to 15% of the value of Bitcoin and Ethereum trading on the market. So this was a story from about Singapore just 2 days ago, and it says no strong case to ban crypto trading, Singapore says. For now, the nature and scale of cryptocurrency trading in Singapore does not pose risk to the safety and integrity of our financial system, the government says. And the article cites regional crypto pressures, regulations adopted by governments in neighboring countries. Okay, we know what those countries are. For example, China and Korea have increased pressure on authorities in Singapore to clarify their attitude towards cryptos. At the same time, more and more crypto companies from the region are seeking a friendlier regulatory environment and are looking to Singapore. So Singapore is important for that matter. Also, remember that Japan, which was involved in the second major hack in the last few years regarding cryptocurrency, but also two of the biggest heists in history, one being the Mt. Gox hack and this current one being the CoinCheck hack. So there's been a lot of regional turmoil in the Asia-Pacific region as far as government crackdowns and security issues, and exchanges have had to move from one jurisdiction to another because of some of these issues. So that's good news. No strong case to ban crypto trading, Singapore says. The Korea rules seem to be not very restrictive and being implemented smoothly. This is the Thai government. This guy looks tired, like he looks like he's been trying to regulate cryptocurrency, but the headline here, I like this headline, says Thai government cannot stop crypto use. Regulatory framework expected in a month. And the Bangkok Post reported the government will not ban cryptocurrency trading, adding that a regulatory framework will become clear within a month. So Thailand looking like it's just doing what the other countries have done, and that is put a framework in place. And on top, then finally we get, talk about piling on. When there's bad news, people seem to pile on. When there's good news, they pile on also. Leading Australian banks allow customers to purchase cryptocurrencies. So Australian banks have decided to go ahead and allow the purchase of cryptocurrency by their customers, which is, again, a positive development. Now, more importantly, probably from the standpoint of market manipulation and insecurity, doubt, fear, and uncertainty in the markets, is this idea about Tether manipulating the market and whether or not they're printing Tether to artificially inflate the cryptocurrency markets. And this came out just a few days ago, a statistical study showing that little correlation between Tether printing and Bitcoin's price. And what it says is, this is a graph, and I don't know if you can read this, but on the y-axis, Bitcoin daily percentage change, and the x-axis, Tether daily percentage change. And it says the correlation in all cases is still close to zero, and its testing does not support the claim that Bitcoin prices are moved by U.S. DT or Tether printing. So there does not seem to be a correlation between the printing of Tether and the price of Bitcoin based on a statistical analysis. So that would negate most of the major negative news that came out in order to drive this market down. And like I said, it is an odd quirk of investor psychology that negative news will lead to panic. The panic will lead to selling, a big sell-off, and obviously we've got a big sell-off. Just for example, Bitcoin going from 14,000 all the way down to a low of 6,500. So the big sell-off, and even though a lot of the negative news that led to the sell-off has been negated, like the Tether conspiracy, or imagined conspiracy, the ban in Korea supposedly to ban all trading, all of these issues, even when they're resolved, it doesn't seem to recover back in price anywhere near to where it started, but rather it looks like more good news is necessary to really get the markets rolling. So that's the issue, but there is more good news that's fueling this recovery, and that is the U.S. regulatory picture has begun to emerge, and the initial news on this is optimistic. Okay, and this is the most amazing thing to me. This, I think, beyond all of the things that we've talked about so far, this is by far the most important piece of news coming out in the last few days. Okay, this came out a few days ago. Senate cryptocurrency hearing strikes a cautiously optimistic tone. Other headlines were crypto industry reacts to Senate hearing remarks, and Bitcoin traders are relieved at CFTC and SEC cryptocurrency Senate hearing testimony. So, what is going on here? The Senate Banking Committee actually met with the SEC commission chairman and the CFTC chairman to talk about cryptocurrency. Now, I think that it's amazing enough that these guys are actually talking about cryptocurrency at all, for this to be a positive development. Okay, just imagine where cryptocurrency was a year ago. I mean, this thing has emerged from the shadows of the dark web to now being literally the center of a Senate Banking Committee, SEC, and CFTC hearing in Washington. So I think that that's huge. And I think it's also huge that this hearing and these regulators actually did not show signs of uh, being, just old men and not understanding what cryptocurrency is all about. Okay, there's they were actually uh, they seem to have a grasp of what they were talking about. All right, and this is why I say this, because in the hearing they mentioned three pillars of the virtual currency ecosystem, for lack of a better term: cryptocurrencies like a replacement for dollars, ICOs like a stock offering, and distributed ledger technologies, or the technical framework generally known as blockchain. Now, just for a senator to say that gives me confidence, because it gives me confidence that the senator has done some homework to figure out exactly what is going on with the cryptocurrency markets and exactly they what they uh, what they entail. So breaking it down this way into three pillars of the virtual currency ecosystem gives me a lot of confidence. And like I said, I'm amazed that senators are actually meeting with the CFTC and the SEC to talk about this. Um, they even said in the hearing, the potential writ large amongst crypto assets and the underlying blockchain could be as transformational as wireless was years ago. And so they're recognizing that this is a big deal. It's a huge deal. And they're making an effort to understand exactly what it is. Okay, so that is my first reaction. And that, I shared that reaction with this article from CoinDesk. Um, this attorney from this DC law firm said he was impressed at the level of knowledge displayed by the committee members and the regulators, and he also said it's amazing that 9 years after the Satoshi white paper, you've got senators talking about this stuff and not poo-pooing it. And that's exactly what I think. I think that just the fact that they're talking about it and talking about it within a framework that shows that they have some understanding of its importance and the details, some of the technical details of why it's such a revolutionary technology. Okay, and this article from CoinDesk said it highlighted another cause for celebration, that both lawmakers and regulators seem to agree that cryptocurrencies are here to stay, risks aside. So certainly there are some, there's going to be some regulatory speed bumps and roadblocks that need to be, obstacles that need to be addressed. But the fact that cryptocurrency is here to stay, and the fact that the technology is revolutionary, and the Senate is now grasping the fact that it is technically complex and deeper than just uh, some mathematical puzzles and cryptographic puzzles, which is one of the one of my pet peeves, my bête noire, is that you hear so many regulators talking about cryptocurrency and they don't seem to know what it is they're talking about. Okay, one of the world bankers commented yesterday, referring to cryptocurrency as just mega sudokus, and that's frustrating to me, because that just shows that they don't understand the underlying cryptographic mathematical architecture of cryptocurrency is what gives it some very unique emergent properties that supply its intrinsic value. And so This is, I agree, a cause for celebration. Lawmakers and regulators agree that cryptocurrency is here to stay, and it's amazing that you've got senators talking about this stuff and not poo-pooing it. And like I said, it's emerged from the dark web, from the shadows of the dark web to mainstream, Wall Street, U.S. Senate, uh, uh, top central topic of conversation. So Bitcoin traders are relieved, uh, and uh, there was one more meeting of the Market Risk Advisory Committee of the CFTC, which meets every year, and it says here this effort is part of an ongoing conversation American regulators are beginning to have as cryptocurrency begins to increasingly dominate their discussions. So that's another indication that cryptocurrency is here to stay and is it's starting to be recognized for uh, the important revolutionary advance that it is. Uh, at issue in this meeting were the CFTC statutory framework and regulatory process, and they allow new products to self-certify, and they feel that that's served the market well. Since they've done that, uh, it says here that new futures products, that was 18 years ago. 15 exchanges have self-certified 10,628 new products, providing more risk management tools for commercial end users across many different asset classes. So uh, that was all good news from the U.S. If you can believe it, the U.S. regulatory picture broke down into basically good news for the cryptocurrency markets in general. So, looking back at our chart, we see that it has been somewhat of a crypto bloodbath and carnage. You can see in the yellow circle, this is the last 3 days. In the last 72 hours, cryptocurrency markets coming back into the green. Today is the third consecutive day that the markets have been in the green, and that is the first time in about a month. And following the news, both negative and positive, and how the market reacts to it can help you make better, more informed, more research based cryptocurrency investment decisions. Ciao for now.